Good morning. Welcome to Forex in Four. Today is Tuesday, October 11th, 2011. This morning we're starting out here. We're taking a look at the S&P 500 here from yesterday. Yesterday we had the largest one-day move that we've seen in about, I don't know, I think it's 2 months or so. And obviously it was moved to the upside. I think Dow finished up around 300 points. All right, it closed pretty heavy it was pretty strong into the close yesterday. You can see these moves right here. All right, as it was pushing higher, got just beneath 1200 before pulling back a little bit. So this morning we're seeing a little bit of risk aversion on the books, but not a ton here. This is more like a natural technical pullback that you typically see after you've had a huge move. If this move were to the downside, all right, we might call it a dead cat bounce. All right, but on the upside, just a little bit of a pullback here while we're waiting to see what's happening. So we've got a little bit of risk aversion in the markets. Not a big deal here to start today. Let's take a quick peek at Euro. All right, you can see Euro, same sort of action, pulling back, hovering right around that 136 level. Now, the big news this morning is that Slovakia is set to vote on the EFSF expansion, on the deal that they came up with on July 21st, which, yesterday we said is pretty insufficient and that they need to do more, but they still need to ratify this vote, and every single member of the Eurozone needs to do it. So, a little nation like Slovakia could ostensibly block the process and, cause a whole new round of selling. So that doesn't seem to be likely at this point, though. I think everyone's expecting Slovakia to come up with the vote necessary. But we're just going to keep an eye on the situation and see what's happening. So that's kind of what we're looking at to start the day, and just a little bit of a pullback here, pulling right into the daily pivot area, and you can see that's just right around 135.75 here. So not a ton of action. We're looking at the 30-minute chart. Just want to show you pound. All right, pound, sort of same action. Okay, we're getting the pullbacks, and the range you can see here is tightened up quite a bit after this tremendous expansion that we've seen. Now, industrial production figures and manufacturing production figures in the UK came in lower than expected, but not by a lot. I mean, they're missing by 0.1%, which it really isn't that big of a deal, but yet it's enough in this fragile environment to say, okay, wait a second, the UK economy is declining. Well, we know it's declining. I mean, we know that a lot of economies are declining, all right, and that the metrics and the numbers aren't going to come in much better than expected. But if you're only missing by a little bit and you're basically hanging on, then when the economic cycle returns, if we can get some clarity here on the euro debt crisis and perhaps some sort of growth here in the U.S., then they're poised to be in a pretty decent position. So not too concerned about the pound at this point. And it looks like markets want to go higher. Now we're starting earnings season here in the U.S., which means you're going to start getting companies reporting their numbers, and this is going to be important because if the earnings come in bad, all right, then stocks are going to sell off a bit, and the correlations are going to take down the euro, the Aussie, and all the other risk currencies as we get a little bit of dollar strength, all right, as we get that risk aversion trade happening. But I think right now that the equities earnings bar has been set so low, all right, everyone's sort of come out and they've pre-announced and analysts have lowered their expectations that it seems rather likely that even in this declining economy that a lot of these companies are going to come in and beat their numbers, or at least be close. So listen, we know about the economic malaise we have right now. That's why people are protesting all over New York right now. There's I guess they're moving the big march and protest up to my neighborhood. I guess I'm not considered a millionaire these days because I live in New York City, but I can assure you I'm anything but. I just hope people don't confuse it for these nice house tours that they sometimes give. So anyway, so that's kind of what we're looking at here. We'll see dollar yen. All right, dollar yen just still sitting in that range. I mean, look at that. This is practically untradeable here. This is a 30-minute chart, mind you. All right, we're talking about a 10-pip range. So that's just sitting right pretty there. They had their monthly economic report that came out earlier, and we know that things aren't so hot in Japan, but they're working to improve things. Consumer confidence actually came in better than expected, so that's not a horrible thing for Japan. But later today we're going to get the release of the Fed minutes. All right, and then we're going to see, what they're really talking about here in the U.S. I mean, everyboerdy's thinking that Bernanke and company are going to err towards the side of more easing, which should potentially juice the markets higher. So it's going to be interesting to see how that works out. But other than that, there really hasn't been a ton of news today. We had Asian markets were higher overnight, and you can see here that the Aussie sort of pulled up with that and then sort of tapered off and came back. But again, we're sitting up just above the daily pivot here on the Aussie. All right, and they had business confidence figures that came in a little bit better than expected, but they're not. No one's jumping for joy over there either. So we're all in this together. It's sort of this economic malaise that we're seeing, and we're going to see how this thing plays out. But tomorrow we're going to get British jobless claims. All right, if we pull it back to the pound here, I just want to show you. All right, we could see that they're expecting to gain around 24,000 newly unemployed. So jobless claims are going to increase, they're expecting. So if the number's higher than expected, that's actually a miss. Okay, but if we go back and we just pull it out, all right, you can see here that the pound has had this nice move higher since last week's announcement of more quantitative easing. All right, and if we're sitting right up here above the S1 and the 50% retracement on a pivot move from earlier in the year. So 155 appears to be pretty decent support. We might trade down close to this range, but I would be looking to possibly buy this here above 155. And that's really what's going on here. So, there's unemployment reports are coming out. We've got some PPI data to the end of the week, but I mean, right now it's still Euro debt crisis that's on everybody's mind, and then it's going to be corporate earnings here in the U.S. when we start to see these companies report. I mean, if these companies start to report good numbers, all right, there's going to be some hope. Hey, wait a second, maybe there's going to be some hiring on the horizon, despite the awful business climate conditions we have here in the U.S. All right, and if Washington D.C. can get the heck out of the way, I'm not saying that they will, but if they can, come to some sort of agreement, all right, that can at least give business owners a little bit of certainty, even if it's bad, even if the news is bad, at least give them the certainty of what it's going to be. But I think right now we're kind of coasting in towards the election year, and now we're getting a lot of politics jumping in, and the class envy and warfare, which everybody wants to tax millionaires and all these other things, but when they realize that those are the people who provide the jobs, then wait a second, it doesn't make so much sense. So, there's got to be a happy balance in there somewhere. I'm not saying that millionaires shouldn't be taxed more than people who aren't millionaires, all right, but you got to do it in a sensible way that helps create jobs and not stymie them. So that's really what we're looking at. Keep an eye out for the Slovakia vote today, and maybe some more visibility out of the Eurozone, and then corporate earnings on the docket at the close today. So it should be fun. We'll see what happens. So that's what I've got, folks. Good trading to all.